This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Thursday. Welcome to today's morning call. We do have mixed markets around the world, but definite risk-off type feel. Recently, if you look to Europe, Europe's been the source of a lot of weakness. You know, ever since that Volkswagen story started to unfold, you know, weakness set in there in an already broken environment. I think the DAX is down almost 10% in the last week and a half and off another 2% overnight. So that's putting some pressure on our futures that are down about 15 handles, which we'll get to. First, you look here at the HEDJ, which we do look, you know, for some clues here and there. And, you know, to start the year, you had a blistering move, you know, to the upside above the 8 and 21 day. And right around here is where it broke. Right around here is where you had that little head and shoulders top pattern that tells you some type of corrective move could happen, but you never truly know what. You have to measure it along the way. So the first move was down. And then since then, it's been pretty much, you know, in a downtrend since, and then accelerated below the 200-day, which we say once you get below the 200-day, besides momentum leaving, you know, real macro money's leaving, and now look where we are. So we have this lower wedge that it's been pretty much forming, broke below it, we're down again. Here are those August lows. The August lows come in the HEDJ around 52.45. We'll see how this is handled probably, you know, sooner than later. As far as Asia is concerned, the Nikkei that just opened up, it's been closed since Friday, is down almost 3%. I think Mazda is getting hit. A lot of the auto suppliers are getting hit there. That's been a weaker area as well. You know, the Shanghai is up small, still vulnerable, but, you know, the focus hasn't been there. It's been on Europe. And as far as our markets are concerned, you know, we've been below all the moving averages. Technically, we've been broken for a while. I've talked about the active and intermediate trends being broken. You know, the fact of the matter is what's next is potentially that retest of those August lows, and then maybe even some macro levels. So, you know, if you look at the SPX, which we do maneuver, you know, on a very active basis, you know, you look here at the channel that we had to start the year. Boom, this is when we broke below the channel. This is when this inside wedge broke. Here was your spot to take risk down, potentially get short, and switch gears. Below all moving averages, below the 200-day, engulfing this entire lower support area of the channel. Okay, then what has happened since then? We had this wedge type pattern. First push was up, okay, into the Fed that did not raise rates, which caused this topping tail into resistance, which was another sell signal. Okay, now look where we are. So the question is, if you're trading this thing actively, how do you maneuver levels? Well, at this point, we are below this recent support. This recent support in the SPX is about 1929 to 1932. So this morning we'll see if it gets reclaimed or not. The next level below comes in here, which is a little bit closer to 1900. So at this point, we'll see if we could reclaim this level. If not, you know, if I see this fast this morning, I might try a little long. You know, but because I am risk down pretty much flat overnight, I've been trying to be, you know, tactical with two-way trades. We even had a nice one, you know, short when it did break this little spot. So anyway, you know, if you want to compartmentalize this, okay, the longer we stay now below this 1957, below this spot, the higher the percentage that we do get a test of those lows. And this morning, we might even see this spot. So we'll see what happens there. As far as some leadership to the downside, a few days ago, Hillary Clinton came out and bashed prescriptions. Everything's too pricey, et cetera, et cetera. The IBBs broke that key level we were talking about around 351. And since then, it has been pretty weak. You know, if you look at levels here and what to do, here is your ascending channel here that broke to the downside below this 351. You could have either gotten out of your lungs if you were playing this tactical bounce, or maybe even got short. And now, developing a little bit of a bear flag in here. So the question is, if it stays in here and stays below this 340 and goes sideways, then perhaps it continues to the downside, and that would be below this 328. This 324 to 328, it's very big support. If it were to break below that, you will see volatility spike and would not be good for the overall markets. You know, the banks have been also pressuring the markets ever since that. They've been broken for a while, but they tried to act somewhat constructive when we were heading into liftoff or put-off, and when liftoff didn't happen, the banks got sold quick. So if you look at the XLF, you'll see that it's hovering on big-time support. First of all, look how this has been below the 200-day for quite some time. That is when you take risk down, and if you're more active like I am, this was probably your spot to take risk down when it broke the wedge to the downside. So now the question is, can it hold this area? Can it hold 2220? So that's what it's trying to do. A break below that, and you have a heck of a big void all the way down to that August 24 low. So if you want to, also put this into some type of range, the longer it stays below this 2290, the higher the probability this breaks to the downside. If you want to look at a few stocks in the sector, look at Goldman Sachs. My thoughts go out to Lloyd. Hopefully he handles, hopefully he feels better and all goes as well as it can for him. But this is, your key spot on Goldman. Goldman's trying to hold this 177 area. If it can't, it could see that retest, pretty soon. It's been below the 200-day since 185, and it's been below its trend of the 8 and 21-day since almost 212. And then remember this outside day right here? There are lots of spots to switch gears, and that outside day in this flag could have gotten you away, could have gotten you short, and then it never even reclaimed that. So anyway, here's where we are now. This is 177. See if this support holds or not. You do have resistance right here, so this is that lower zone. We'll figure out what's next there. I'm sure most other banks look somewhat the same. You look at JP Morgan, and it too is trying to hold on to a key support spot. The question is, can it? If it could hold this, you probably won't see such crazy downside in the market, but if all of a sudden JP Morgan starts breaking below this 60, there is quite a big void, and you can go here to see where your real next support is. I think this was a flash crash type spike, which I don't think gets revisited. This spot would probably be the next one. As far as tech has been trying to hold up a little bit better than the overall market, but that could change quick. We saw that in August when it wanted to give up its gains quick. The Qs are trying to hold higher, and in order for it to do so, they have to stay above this 103.15, right down 103.15. Below that, you have a few points of reference, but I would say more of a key spot would be closer to this 150, and then you have this 98. So see if this holds. If it does hold, we'll see how this lower pivot gets treated, just like we've been doing everywhere else. Look at this topping tail sell signal into the moving averages. That was your spot to get out of dodge and maybe get short. And then there is this ascending channel that it broke to the right side of. And that's where a lot of these indices and sectors are hanging on to the right side, which is the right side for the bears, of these ascending channels versus the left side, which is above trend. So they are below trend. And the longer they stay below trend, the more weakness sets in and the higher the probability for lower prices. As far as individual stocks, so many of them have been broken, so many taken out to the woodshed. I don't even know more than 5 to 10 stocks that are above all their moving averages. But some of the key names that we focus on in trade, some are trying to act okay and some aren't. Apple's been upgraded 2 days in a row. Not sure if they did that to try and stabilize the market a little bit ahead of I guess the Pope and ahead of the China premiere. But anyway, here's this little rising ascending channel and this little triangle in here. So I would say for this to stay somewhat constructive, you want to make sure this 112 area holds. If something were to be able to go green today, you would think it's Apple that closed well yesterday. So with Apple down $1, I would look for a buy versus a 5 15-minute low and see if it goes green. If it doesn't go green and stays weak and breaks this, I got to believe that technology loses some of its bid. so that's your spot right there. Facebook also has been trying to be better than most names out there. Obviously, it's it's one of the few names above most moving averages. In order for this to stay constructive, you want to see this hold above 92. This too today, I would look to see if it can go from red to green. If this can't go red to green, and if Apple can't go red to green, chances are we're gonna have a trend down day. This kind of failed right into it poked its head up into this resistance, and now we'll see if it could hold here. Amazon also has been in the stronger camp, but I think some guys got out when it broke this little 539 pivot. It's hard to pretty much trust anything in this tape except for trusting trades. And if you took the Amazon trade above 532 and sold it, into strength, you made some money. Some guys used this 539 as your out, and if you did so, you're not in the weakness today. If you did, and you are looking for a spot that you want to see hold, it's been above the 8-21 day for a while, and that comes in a little bit closer to this 524. As of now, it's still, if you want to draw like a line like this, it's still above this ascending channel type thing. But if it were to break below here, chances are it could see downside fast. Remember how fast this happened here? Boom. Stay on your toes just in case. Okay, but if the market gets any better, this has been acting better. Google hasn't been as strong. Most guys already got stopped out here. You had a decent break above this little spot. It's already back below it. So at this point, I think it's an avoid with just minor scalps. See how it handles this little spot here, which is 645. Below 645, there really isn't anything substantial until about 6.25. So we'll see, what happens there. Tesla's been interesting. It's been acting very strong, and I know it's a high valuation stock, which it is, and expensive, but technically maybe money's flocking there because of all of these, emission software problems. There was, I think, a rumor that BMW is worse than Volkswagen, so I guess electric cars don't have problems with emissions. So anyway, Tesla is acting better, for the overall market. We did have this as a trade right here, if you remember, when it went above this 255, and it's holding it pretty nicely. So if this stock could stay above, just say 255, and then the market finds a little bit of a bid, I would think that this is one of the first names that you could buy high and sell higher, and that level would be a little bit closer to 265. So this is acting constructive, but again, when the tide's going against you, it's hard to hold up, and I would use this as your level to make sure it tries to hold if you're playing it for momentum. As far as Netflix, not much to go on there. We've had some decent trades to the long and short side. At this point, this downtrend is still in control here in Netflix, and we'll see what happens here as it comes back to where we had that nice little bounce trade. That's closer to 93.50. Usually you hit it again, you don't get the same type of trade, but at least you should be watching that spot. FIT fit in the stronger camp versus the weaker camp. At this point, it's probably opening a little bit lower. We talked about perhaps buying the bid a few days ago here. Now let's see if it holds higher again. So see if this is a candidate to go from red to green. If it doesn't, that'll show you how weak the market is also. So here, if it holds above this, what is this, 35? Yeah, actually 36.73. Stay above that, and you're still in the constructive camp. So those are the names that are somewhat in the constructive camp. There are a few others. I can't get into all of them. You have Starbucks that looks pretty good. Above all moving averages, near highs. Under Armour's hanging on by a thread, which is, the prior breakout. So you want to make sure that this holds somewhere around here. If it does, that's constructive. But if it doesn't, you could see more downside to the 21-day. A lot of the other names, like, on Redler All Access, they gave me some names to look at. There's just so many broken names out there. You look at a stock like Wynn. Wynn and all of those casino stocks, like 2 years ago, they were my go-to list, and then I really don't have them on anymore because they've been broken ever since. Goes to show you that, when you break the 8 and 21 day, which is what Wynn did way back when, that's an out for momentum guys. But when you break the 200-day and you don't reclaim it, that's your out as an investor. If you sold, if you sold here, it probably hurt at 190, but a lot better than all the way down here. My goodness, this stock has been absolutely annihilated and hasn't really given any traction off of attempts to bottom at this point. Here is that low. If you're short, at this point, I think you're being a pig. You probably want to cover, but it doesn't mean it's a long yet. You have the pivot here at 60.06. If it were to break below, come back above, maybe you got it for a trade, but ultimately every rally attempt has been sold. But more decline, just to show you that, it doesn't matter the name, doesn't matter the stock. If below the 8 and 21 day, it's not a swing long. Below the 200 day for 3-4 sessions, get out of it as an investment. A few last thoughts. Oil, yesterday did get a little weaker, and if the USO were to break this spot, okay, which is another key inflection point, it could add volatility to the market. If you remember here, this is when a lot of people are trying to figure out, can the bounce hold or not, and it broke to the downside, and we have a similar spot right now where you had this igniting move off the lows way back when, and now it's trying to hold this mid-level. And it looks like after yesterday's outside day, it could be in jeopardy. So if you're in oil, I would just be careful if it were to break this 1420, which is like 42 in oil, which could give you a move back to the lows, and that was 38 in oil. So at this point, this could control it, and if it starts to head lower, that's going to add some more volatility to our market. And the XLE did break 62.50, so if you were trying to get continuation there of a long, you got stopped out yesterday as this level did not hold. And in summation, we're in a very weak tape, and it's, we're coming into the last week of September. Usually bottoms are set in, sometime in October. About a week ago, I talked about how corporate buybacks are in blackout periods, so you're going to not have that bid in the market as we get closer to earnings season. Usually, I'm not exactly sure the rule, but you can't buy your own stock back, whether it's a week or a few days or 2 weeks before and then thereafter. That's what's been in the market during that whole August decline, and we don't have that now. And we're in this void where are we testing the lows or not? And it seems like we are in motion to do so. So either we'll hold a little bit above it, because once we get close, everyone's going to wait, and then we stop there, or we get there and then we flush below it and come back above it. So at this point, you're in the spot that doesn't make a lot of sense, to put risk on, especially with the oscillator only down like -10, oversold's -50. So at this point, stay tactical, keep using that H cell setup, for tactical shorts. Keep, putting those reference point lows in. We've been able to buy a little bit versus those points, and then watch some of the names that are still acting constructive, because if they start to lose those upper momentum, they could actually give way fast. And hopefully they hold in there, so when the market actually finds its footing, there'll be a bunch of leaders to go to, and hopefully we'll have them for you here, and we'll be able to benefit from embracing the volatility and not, going underwater, holding your nose to the downside like a lot of people out there have done. So I will see you at the recap. I hope some of you guys are coming to the Atlanta conference. We have a conference going on in Atlanta. It's on the site. Saturday, it's for free. And then also, I think we're like a month away to the Financial Festival. So many speakers. That lineup is unbelievable. So sign up. That's going to be a great time. That's in Miami, and that's November 6th to 8th. And hopefully I'll see you at one of those. And if not, you could see me here, and we'll navigate these markets together. Have a great day.